Let's in fact take this conversation forward. I understand that Mayuresh Joshi, who's fund manager, Angel Broking, is joining us. Mayuresh, good afternoon to you. Piyush was just giving us two big really reviews in terms of the news points that we've seen today. One was, of course, on the approval of the merger of the Indus Towers and Bharti Infratel, as well as, of course, looking at Airtel's review so far. Your take in terms of what's happening with the companies, as well as, I guess, what this really means in terms of the consolidation cycle we've been witnessing in the sector.
Afternoon, Fatima. So, no, clearly I think the results for Airtel were better than what the street was pegging in. So, the domestic wireless business has posted losses, but Africa probably saved the day for them. So, to a large bit, I think the ARPU contraction that has come through is not as worse as the street was expecting. So, the downtrading in terms of ARPU still continues because of the pricing intensity that we are probably witnessing at this point of time. The second element also in terms of the IUC and even the international connectivity charges that are coming through, that's going to take a hit. So I think the ARPUs are probably going to remain constrained at lower levels. But again, I think the kind of expectations that one really has with the deal that's gone through, I think that is again going to be value accretive. How it places both Bharti Infratel and Bharti Airtel is going to be very interesting at this point of time. As Piyush was mentioning, for Infratel in particular, I think obviously the valuations become a little bit on the higher side in terms of an EV per tower basis. It obviously abets and aids Idea's proposition in the entire stake that they probably own. But Idea's balance sheet itself is looking on the softer side, and it's expected to continue being the same over the next few quarters. The tenancy loss that can come through for Infratel, I think that is something that needs to be monitored very, very closely. But a large element in terms of numbers for Airtel were relatively better than what the street had pegged in, and so the positive reaction on the stock.
Well, positive reaction on the stock, Mayuresh, but going ahead from here, do you think there's any merit on a contrarian call for the telecom sector, or would you say miles and miles away?
I would stay away, Vikram, at least at this point of time, because I think the basic three premises remain the same.
Right.
So, I think the downtrading in ARPUs, as I said, is going to continue over the next 2 to 3 quarters. What Reliance Jio does in terms of their broadband rollout, I think that is also going to have a significant say in terms of how the incumbents are going to respond. The second element in terms of the exponential data volume growth that you've seen, that is not getting compensated in terms of data ARPUs actually moving up.
Correct.
So data ARPUs are actually coming down because of the bundling of packs that a lot of these incumbents have probably meted out to a lot of subscribers. So the subscriber is probably benefiting at this point of time. And the third obvious element is the leverage on their balance sheet. So if you look at the debt that Airtel has got on its books, I think it's no way going to come down in an effective manner over the next few quarters. The operating expenses are going to be large. You've got spectrum payouts which happen on a periodic basis. And to top that up, again, new technologies coming through means further capex that will be required to probably pump in. So all of this does not give me the confidence that the cash flows will be very, very robust or in an improving trend. Yes, they've maintained their market share. The SMS share has got maintained. The churn ratio probably is far lesser contained than what an Idea might probably lose. But a large element in terms of key operating performances improving quarter after quarter because of all these factors, I think that's not going to, come about in a very short period of time. So my own expectations on an EBITDA basis, if you take the Indian operations, the African operations, probably fairly priced at this point of time. So a range is how I'll probably put in. But Airtel at least is better placed than Idea at least at this point.
That's right. But a lot was said about this being the worst of quarters in a span of 15 years, and that was the story that was getting played up, but not as bad as the estimates went. Meanwhile, Mayuresh, there has been a certain amount of reorientation that's happened at Raymond. What do you make of it, and do you think that within this space you would choose a Raymond?
No, so Vikram, I think it was more a real estate play that the street was probably moving on, what happens with the Thane land. And obviously the announcement has come through in terms of the asset-light model that they are expected to pursue in developing this land. If you look at their core business, there is no significant improvement that I see in terms of the operational synergies that the core business is bringing onto the table vis-a-vis the stock price movement of Raymond at this point of time. So obviously I think one needs to judiciously look at valuations at this point of time, the expectations in terms of their core business panning out, and what probably comes through in terms of the net asset value as the real estate asset gets developed and then monetized over a period of time. So you probably need to work out your IRRs on the real estate part of their business. But the core business obviously will have their due share of challenges in terms of input costs. You've already seen cotton prices moving up. So again, I think fairly valued is how I'll put it at this point of time. You'll have to wait for numbers to probably consistently outbeat street expectations to probably re-rate the stock.
Yeah.
All right, Marish, I want to come to you because yesterday we'd seen the kind of dip in the IT sector on the back of the announcements from the Trump administration in terms of work permits for spouses on H-1B. Number one, how do you think this is actually going to work out eventually when it comes to that 25-75 rule most of these IT companies have in terms of how many employees they're sending out, as well as how you're looking at this particular sector going forward? Because we're looking at, different conditions here. IT manages to sort of wade through quite a lot of it, but this time we're actually looking at, slightly different conditions, including wage hikes in the U.S.
Well, no, so absolutely. Again, I think the outperformance of the IT sector was based on the premise that there was expectations of strong delta coming through, specifically from key segments like retail, manufacturing. Now, again, I think those segments have contributed over the last few quarters. But the additional delta that will come through is from BFSI. Now, the expectations largely with U.S. corporate tax cuts and increased discretionary spending on the BFSI front from the U.S. clients will abet the IT companies' earnings in a significant way. For companies like Infosys and TCS, BFSI is almost 30-32% of their overall top line. Having said that, again, the kind of implications that one really looks at in terms of digital investments that a lot of these companies have put through over the past few quarters, what you're probably also seeing in terms of the onshore hiring. So again, I think the local hiring is something that has gone up significantly for a lot of these players in lieu of the political and regulatory changes in the US markets. That proportion actually has started moving higher. So to that bit, again, I think the kind of expectations that one has in terms of client discretionary spending actually impacting positively the dollar revenue growth and the constant currency growth. Infosys is probably disappointed a tad bit in terms of what they've guided for, specifically on the EBIT margin front and the kind of investments that they need to get through over the next few quarters. TCS, solid performance, solid management commentary. You're seeing similar trends panning out for companies like Mindtree, Cyient. So I think these were all stocks that we had liked, but the movement has been so sharp that the valuations for a few of these stocks probably on the higher side. So again, I think being very, very selective here is the way that I'll put forth. The currency depreciation obviously acts as a tailwind to these companies, and a large element in terms of utilization levels remaining strong, with reasonable and strong order books expected to be executed over the next few quarters, should hold their earnings in good stead. So I think Cyient on declines is something that we'll still continue to prefer from the mid-cap pack, followed by nucleus software. Within the large caps, I think TCS has always been a hold for me, continues to be that way. And HCL Tech and Tech Mahindra also are similar hold recommendations with expectations of strong growth from their engineering and the telecom segment respectively.
Mayuresh, talk about the tailwinds for the IT sector. Do you think they're going to help the mid-caps more than the large caps? Because I've always seen you, when you come to talk about the IT stocks, you do favor the mid-caps much more. But then you've seen what a TCS has been able to achieve, and the run could be even longer, according to some experts. Where do you stand?
No, so it's all about digital investments, because everything that is now getting bundled in terms of order wins and bundling of orders is coming through the digital mode. So what you've seen in terms of the digital transformation deal wins, whether it's be large players like TCS or mid-cap players like Mindtree or Cyient or an NIT Technology, I think a lot of focus probably goes into the digital deals that they probably sign up. The second element obviously is that mid-cap IT companies have niche product stroke services. So if you identify a company where these product services can be utilized far more efficiently over the next few quarters and years, you're probably going to see earnings momentum that can sustain for these companies. The large caps are obviously working on a very large base, so it's something like an HDFC Bank which is growing 30% a few years back. Right. It's now growing at 20%. So I think the orders will come through in terms of for the larger companies in terms of the bucket sizes in selective categories. For the mid caps, I think even a 1 million, 5 million order, considering that size, is a substantial.
That's right. Fair enough. Mayuresh, on the cement front, you of course have that kind of demand scenario that we are tracking constantly with the government spends on metros, infrastructures, on roads. Then there is, of course, the housing piece as well. But on the other side, pricing power seems to be totally gone as far as the cement sector is concerned. How do you view it? And with Ultratech, do you think the possibilities of major upsides are likely?
So the stock has moved up, very frankly. The second element in terms of sweating of the JP assets with higher utilization levels, as Piyush was mentioning, is a very high probability, because that's what they have done in Q3. So I think Q4 should be a repeat performance in terms of the sweating of the JP assets. The third element, obviously, that the sector is facing in terms of headwinds is the power and fuel costs and the freight costs actually have moved higher. So that element in terms of the demand not picking up to the extent of these costs moving up is going to be an offsetting effect in terms of pass-through not being done in terms of the net realization prices. The fourth element here is going to be how you probably perceive the sector too, and you're right, in terms of the spending that is expected to come through from the government side. So rural housing actually will account for 33-35% of the cement offtake. What you've probably seen in terms of additions, in terms of new capacities over the last 2 to 3 years, and the expectations of demand growing at 1.5 times GDP as a general thumb rule, you can expect volume growth of anywhere between 10.5-11% over the next few quarters, barring aside the 2 monsoon months where activity will be extremely sluggish. So I think volume-led realization growth, expectations of input cost inflation actually coming down, a certain element of demand coming through, enabling the companies to probably pass through the prices in terms of realizations, and utilization levels for their plants staying higher. And I think that's leverage that cement companies can create. Now, valuations is something that you probably need to keep in mind. So on an EV to ton basis, obviously Ultratech is not cheap.
Yes.
Ramco Cements is not cheap. A few of the mid-cap players, you probably need to redefine your strategy, because there have been a lot of issues related to sand mining in the south, a few areas out of the north, but increased infrastructure activity for companies operating out of the east, where they have set up plants, whether they are split grinding units or clinker plants that have got set up.
Yeah.
The effective utilization can actually have a huge positive impact on an EBITDA per ton. So as a sector, remain extremely positive. The hold rating on Ultratech continues. If the numbers are good, we'll probably relook at our.
Well, today if you go to see right now in the realty space as well, there is major enthusiasm, there is an excitement over there, because the realty sector is spiking close to 2 percentage points. And of course, we're seeing what India Bulls is doing, DLF is doing. India Bulls is going up by as much as 5 percentage points. Hitting the upper circuit right now is DB Realty as well. So Realty is clearly in focus. The only stocks that are down are Godrej Properties, Unitech, Phoenix Mills and Omax. But other than that, most of the other realty players, whether it's Oberoi or Shobha, they are showing good traction in trade today. So that's what we are seeing. And also DP favors affordable housing in no development zones. The importance in development is to be in commercial spaces. As per the 2034 ecological sensitive zones to be regarded as natural areas. That's what my colleague Karishma is picking up as well, and that's something that we are tracking very closely. So if you look at what's buzzing in the realty space right now, sometimes the excitement can't be really pegged down. We are tracking very closely. So if you look at what's buzzing in the realty space right now, sometimes the excitement can't be really pegged down. Can you at this point in time? Because last year was another story, and now is anything palpably changing? Because one would hope and imagine that it's built on sentiment in terms of expectation of what the sector can deliver. Has anything changed?
No, I think nothing has really changed on the ground. So when we're looking at data points, and if you divide the country in 4 broad zones, so the northern part of the country, NCR, Delhi, is still plagued with inventory issues, large amount of inventory on real estate asset books. The realizations are not improving because of the inventory issue. Out of the west, again, I think you're probably looking at stock-specific action, because some portions and pockets are doing well. But are you actually seeing realization growth come through, both in terms of the pre-sales velocity? Are there any new launches which have come through across the industry as a whole? And what about the organized players? So when we're talking about RERA getting implemented and a lot of the unorganized pie moving to the organized sector, I think that will happen gradually over a period of time. But for that, I think the inherent demand has to come back very, very strongly, the signs of which are not apparent, at least at this point of time. So it's all wishful thinking in terms of projections that you probably got in terms of how the demand will pan out over the next 2 to 3 years. And for that, I think you're probably looking at the outside aspect as well, how the economy will shape up, what you're probably looking in terms of global macro factors, how the discretionary spends in terms of hiring has probably panned out for the service sector as a whole. For South-based companies, I think the IT hiring becomes extremely critical. So I think how the IT hiring is going to happen, and when the expectations are so large that you've got projects on hand, the execution is happening, utilization levels expected to remain high, I think that portion of the market should hold up. And debt levels, obviously. So I think you have to be selective.
Very selective. Right now we are hearing, watching Mayuresh Joshi. Thank you very much for joining us on this edition of Lunch Money.